All right, so the US economy just smashed a couple economic records. Yes! For the worse. All right, so here's what's going on. Inflation is getting so bad in this country that game shows are now offering to pay off people's energy bills as one of their prizes.
It is going to be... It's your energy bill! We're paying your energy bill for 4 months.
Credits to John Oliver for finding that clip. That is one of the funniest and saddest things I've seen this year. But also really interesting is that we've been told the reason inflation is going up is thanks to the cost of gas, food, and energy prices going up thanks to the supply chain problems in China. But now, the government has no choice but to admit we can't blame China anymore because the reason inflation is heating up is thanks to literally everything else going up in price as well. The shelter index, for example, which is a proxy for the cost of rent, went up 0.7%, which I realize doesn't sound like a lot, but just for context, that is the single biggest monthly increase since the year 1991. Then we have the cost of electricity, which went up 15.8% year over year, the single biggest increase since the year 1981. And then we have the food at home index, which went up 13.5% year over year, the single biggest increase since the year 1979. So we are smashing decade-long records, just maybe not the right ones. And that's all because the CPI, the Consumer Price Index, which is the thing that measures inflation, came out this week at 8.3%. Last month, it was 8.5%. So it looks like inflation is coming down, but not really. Because if we use the Fed's favorite way of measuring inflation, which is the PCE, the personal consumption expenditures, that number is actually up. And remember, the PCE takes out food and gas prices out of that calculation. That's because you don't really need food when there's cake and gas when there are Teslas. No, I'm kidding. The reason that economists take out food and gas prices is because they call them volatile. In other words, they fluctuate in price too much, and they are the two only things that, regardless how much they go up in price by, we are still gonna have to buy food and gas. So by taking those two out, economists argue that it gives them a better perspective of where the core inflation metric is going. But even if we use that metric, the core PCE inflation, that number is still double what economists expected at 0.6%. So on the whole, we're not doing better. Inflation is still going higher. Even though the cost of gas is going down, the cost of everything else is going up. And that's also one of the biggest reasons why the stock market lost a massive 4.3% on Tuesday, and Bitcoin crashed over 11% back down to roughly $20,000. So let me help explain exactly what is going on, because this month is going to be extremely important for interest rates, and that's going to affect every household and every investor. So with that said, let's get right into it. Hi, my name is Andre Jick. Hope you're doing well. Come for the finance and stay because I have something really cool to show you. Check this out. This is a stack of bills that are actually blurred in real life. This is not video editing. This is what this object looks like in real life. Looks like Grand Theft Auto money. Super random, but inflation's going up and I needed the write-off. All right, so here's what's going on. The Federal Reserve is about to get together to decide how much to increase the federal fund rate by. And remember, the federal fund rate is not the cost for us to borrow money as consumers, but the cost for banks to borrow money from each other, which of course will affect us as well. The reason this is important though is it's gonna affect everything from the stock market, real estate, crypto, and everything in between. Now, here's something that's really interesting. On June 16th of this year, the Federal Reserve increased the federal fund rate by 0.75%. That was historic because the last time they did that was in 1994. But when they did it this year, the stock market actually went up 2.5%. So right now, that's what the market is trying to figure out. How is this going to affect it? So let's take a look at the trusty, handy-dandy little CME Fed Watch tool, which if you remember, also has this epic countdown. I made it seem way more dramatic than it actually is because it's not that exciting, but what this CME Fed Watch tool shows is that there's a 100% chance that rates will go up. That part is obvious, but it also shows this graph, which is 76% chance that the federal fund rate will fall between 3 and 3.25% come September 21st. It also shows this graph, which is 24%, which is that the odds the Fed will increase between 3.25 and 3.5%. I know that sounds crazy, but here's what all of these numbers mean. Right now, there's a 100% chance that the Fed will increase the rates by at least 0.5%, but there's also the potential to increase by 0.75%, which is what the market wants to see. But there's also the small potential for a 100 basis point increase or 1%, which has never been done before in the history of the Fed. And if that does end up happening, here's what will happen to the markets. So first, let me give you some context behind the divide in economists' LE5 style. Because the first side of the argument, people like Powell are saying, let's slowly raise rates so as not to crash the economy so that people don't lose their jobs. The other side of the argument, though, says, no, let's raise rates now because the real interest rate is actually negative, which is weird. Why is our interest rate negative? Isn't it 2.5%? It is, but when you compare it against inflation, the real interest rate is still negative, meaning it still incentivizes people to spend and borrow today if they believe prices are going up tomorrow. borrow, especially, and think about it from the perspective of the older generation that have been through the 70s. They have been Paul Volckered. In other words, they have lived through a time when interest rates were over 13% in the 70s and the early 80s as high as 19%. So to them, when they look at the current federal fund rate of 2.5%, or the 6% rate for them, the prime rate, they look at that as cheap. They're like, well, if we're gonna get to the 70s and rates are gonna be 12+%, I would rather borrow and spend now. And remember, borrowing and spending now increases inflation more. We have to at least match the real interest rate to the headline inflation number, which is the CPI, which is that 8.5% number, because that 2.5% that we have right now is just not good enough. And that's also why you see people as part of the older generation, people like this guy, Larry Summers, who used to be the Treasury Secretary, want to see the Fed increase rates by 1% and rip the Band-Aid off now rather than wait until inflation gets worse later. Now, if they do that, here's what I think would happen to the markets. As far as the stock market goes, on the day of the increase, most likely the market would go up, which is weird and counterintuitive because when you think about increasing interest rates, money becomes more expensive to borrow, which means more expensive money for share buybacks and acquisitions. Shouldn't stocks go down? Normally, that tends to be true. But when there's high rates of inflation, investors want to pay less money for a company. PE values get compressed because the time value of money means that investors need to use a higher discount rate when valuing a company. Because again, money today is worth more than it does in the future. But when you have high rates of inflation, you have to take that into consideration so that when inflation comes down, stocks will eventually go up because there will be this uncompression or decompression, right? So that's what happens to the stock market. As far as the real estate market, I think that one's a lot easier to understand. When interest rates go higher, obviously homes become more unaffordable in the short term, but in the long term, their values go down. Now let me show you exactly what the odds of all of this happening are. The CME Fed Watch tool shows this graph. Now it's not actually 24% because it also includes the odds of a 0.75% increase in that bar graph, but it is somewhere in there and lower than a 24% chance. But that is also not where the final interest rate or the terminal interest rate will be, because interest rates will still go up in November, December, and February. Now that you've hopefully understood exactly the two different opinions and approaches to raising the rates, and now that you've hopefully understood how those rates affect asset prices, let me help explain where the rates will be at the end of the year and how this will affect investments. Whenever people ask, Andre, how do you feel about today's market? I'm like, let me show you. It's like The Shining in here, wallowing in the pain. Apple, for example, lost $194 billion alone. And it's not just them. 99% of companies lost value. Just take a look at this heat map after the announcement. More red. You might be saying, Andre, I'm diversified. Why is my portfolio still getting destroyed? And that's because we may not be as diversified as we need to be. And we need to find a more modern solution to the problem. And sure, any single day does not make the market, but it's also not a buy the dip kind of a problem. Goldman Sachs, for example, released a shocking report last week saying that the classic stock and bond portfolio is not going to be enough to keep investors afloat. Just take a look at this. Down 20% this year alone. So forget day trading, forget trying to pick individual stocks because everything is in the red. 99%, remember? Now, right now, Goldman Sachs says the ideal stock allocation has shrunk from 60% down to 45%. And what do they recommend we do with the difference to recover our stolen returns? It is to invest in real assets like art. Now, they say that art can not only protect your purchasing power, but the last time that inflation was this high, art appreciated more than real estate and more than gold at an insane 33% per year. That's why I've been talking about this for months and why I partnered with Masterworks. Just take a look at their results. After 6 exits, the average net return to their investors was 29%. I can't name a single stock that's returned 29% during COVID and during a bear market. Now, some of you who already signed up saw their exit just a month ago with a 33.1% return. That's also why Masterworks is set to acquire and release more art on the platform to meet demand, which is why there's a wait list. But you can skip it by clicking the link in the description below the video. I've been talking about them for most of the year because I think they'll play a role in the future of investing. So go check them out, and now let's get back to it. So the final interest rate at the end of this crazy rate hike cycle is estimated to be anywhere between 4.25 and 4.5%. And here's how you can think about this. Right now, we know that as it stands, mortgage demand has already fallen 29%, and interest rates are already at 6%. And that's when the federal fund rate is only 2.5%, which means that when the federal fund rate reaches 4.5%, that interest rates on a 30-year mortgage could go up over 8%. Now, that is a huge rate increase, and obviously a very bad sign, especially for real estate, which could be made even worse by some of the older people thinking, I've been through this cycle before. I don't have time to wait for the market to recover. You know what? I'm going to sell before it gets even worse. And their sell-off could accelerate a 10% correction to a 20% crash really fast. And when it comes to risk assets like NFTs, Ethereum, and Bitcoin, we could forget about those because those are going to perform even worse. Now, I know all of that sounds terrifying, but that's only because it is. Now, the good thing about all of these rate increase expectations is that that is all they are. Expectation. That is the single and most important part about the Fed's job right now. It's to manage your expectation, and sometimes managing your expectation doesn't mean raising rates on you. Sometimes it means showing you charts like these and convincing you to think more about saving your money and spending less money. That's another way to get people to think about the psychology of spending money. That's the single biggest difference between today and what was going on in the 70s when people got Paul Volcker. This guy was their Papa Powell at the time, and he was forced to raise rates on people because back then in the 70s, people were convinced that inflation was not going away. That is not the case today. Most people today are optimistic about inflation going away, especially now that gas prices are going down. Source? Trust me, bro. Just kidding. The reason that I know most people believe inflation is going to go away is thanks to this survey of consumer expectations from the New York Fed, which shows exactly that. And this is a very good thing, and that's what the Fed wants to see. Another reason, though, that the Fed may not raise rates on us is because of something outside of our control. Outside the US economy, right now, the biggest gambit is the Chinese economy, which for some time now has been on the brink of collapse thanks to their real estate market, which is responsible for 30% of their GDP, which is again at risk. People in China are already prepared for the crash, and the CEO of their largest privately owned company has warned people to brace for impact. Now, when most of us read headlines like that, what does it make us think of? The worst possible outcome, right? Sounds terrifying. But that is another way to manage people's expectations without raising rates, because it makes us want to save more money and spend less money, which cools inflation. Now, I hope the Chinese economy does not collapse, because that would not help anyone. But if it does, the Fed would not raise rates on us because it wouldn't make sense to, which is why right now there's a delicate ballet between reality and expectation. This video is a lot more complicated than my normal videos, but hopefully at least some of that made sense. As always, have a wonderful rest of your day. Smash the like button, subscribe if you haven't already. Don't forget to grab up to $250 worth of free Bitcoin right here. Put it offline, grab the money while it's still there, grab your free stocks, links are down below, and I'll go track them automatically with the spreadsheet link down below in my Patreon. Love you, thank you so much for watching. I'll see you back here on Monday, Friday, sometimes a Wednesday. I'll see you soon. Bye-bye.
Impacts on the wider economy and supply chains. In a release posted midday Wednesday, the National Association of Machinists and Aerospace Workers, AIM, said 49 members of District 19 voted to reject the tentative agreement hashed out with the National Carriers Conference Committee, alongside a board first appointed by the White House in August. Negotiation failed after a closed-door meeting at the Department of Labor headquarters in Washington. There is a so-called cooling-off period, quote, limited union strikes while these negotiations go on. That is set to end at midnight Friday. Light rail workers and the IAM union put an extension in that ratification process until September 29 at 12 p.m. It's a problem, it is, but there is far more at stake than a little under 5,000 railroad staff going without a contract. Listen to this. After Thursday, over 100,000 unionized workers in the railroad who have not linked agreement with carriers will be legally able to strike all the live long day. The Association of American Railroads told CNBC they had no plans to lock out workers' strike should negotiations not be successfully completed. Why are they upset? They're upset because of this. Strike workers report having to come into work at a moment's notice, making it near impossible to schedule anything or attend something as simple as their own birthday party. Under the Railway Labor Act, workers are only guaranteed 10 hours off every 24 hours and can expect to effectively be on call all day, every day. Considering the average 9-to-5ers is often allowed 16 hours off every 24 hours, it is easy to see why railroad workers are drawing the line in the sand. And by the way, railroad companies cannot just replace these workers as they please. They have contracts with the unions, number one. Number two, even if they want to hire more employees, guess what? They have to pay higher wages at that point. Either way, they're completely screwed. Matter of fact, 8 of 12 railroad unions had reached tentative deals with the companies as of Wednesday, but other groups are still talking to carriers, including the two biggest private railroad workers unions, PLAT and SMART Transportation Divisions. The strike at this point would likely impact already straining U.S. supply chains and cause other knock-on effects within the transportation sector like Amtrak. The original agreement included 24% raises and back pay that did not address calls for more standardized hours and the ability to take necessary time off for events and doctor's appointments without being penalized. It's reasonable, isn't it? The IAM represents members of fried rail workers as well as people in the motorcycle manufacturing and aerospace businesses. Listen to this, totally nearly 600,000 members, one of the strongest unions in the United States. They were one of the first unions to reach an initial agreement with the railroads, but now that they're pulling back, it could change the balance of power between the carriers and the Biden administration versus the unions. It would also likely mean affiliated members would be incentivized to not cross the picket line, which could prove a problem for companies like Boeing and Lockheed Martin who have workers in the IAM. Now folks, let's cross our fingers and hope that we're going to have a deal by tomorrow. The problem is it doesn't look likely right now. Something major has to happen. Major compromise by the railroads. Now, if they compromise, their margins will go down big. If they don't compromise, there is also a chance that this strike could be contagious. We've heard that these unions also represent machinists, aerospace workers. What if they all collaborate and strike all together? That would be devastating for this economy. On top of that, it would be devastating when it comes to inflation. It will push inflation significantly higher. If I put 2 and 2 together, we have an election coming up in November. The likelihood is the Biden administration will bend over backwards in an attempt to please these unions. Whether the union's going to agree or not, that's a a different story. If we have a deal, you will see the stock market blasting higher in the optimism alone, specifically these railroad company stocks. If we don't get to a deal, you'll see a major sell-off, not just in the names that are presented, but across the stock market too, because the damage will not be limited to railroads, auto part companies, commodities imports. The rise in inflation alone will punish all of these companies, all of these stocks, and the entire economy. Already seeing the prices of commodities surging high, despite the rise in the U.S. dollar. And the reason is they paralyze the economy. When these commodities are not moving across the country, the supply shrinks. Demand is still too hot. You put two and two together, we have more inflation. So this is just another piece of evidence that is devastating to the peak inflation threat. Yesterday, they got a smack in the face by the CPI. Now they're about to get another massive smack in the mouth. What does that mean? It means that the Fed, the only tool they got left controlling demand, they have to act even more aggressive in tightening the monetary policy and destroying demand in the economy. And at some point, they're going to have no choice but to push this economy into a recession, perhaps a prolonged recession, to resolve the inflation problem. Not through yet, folks. The final episode is about to start. The majority of action will take place in the final episode. But until then, we have to move on and cover the stock market for you. We begin with the closing of the indices today, and here we go. The Dow Industrial Average was up by 30.12 points, or a gain of 0.10%. The Nasdaq also in the green by 86.10 points, or a gain of 0.74%. The S&P 500 also in the green by 13.32 points, or a gain of 0.34%. Today was the reverse from yesterday's massive drop. The market went up, went down, and finally finished in the green. But nothing is conclusive yet. When it comes to the sector's performances today, number 1, capturing the gold medal, energy. Number 2 for the silver, cyclical. Number 3 for the bronze, utilities. The laggards of the day led by real estate and materials. The advance to decline ratios, NYSE 48% advancing versus 49% decline. Despite the positive close of the Nasdaq, the breadth was not so hot, so only 45% advancing versus 51% decline. Moving on to commodities. Today the dollar was down by a little bit. It lost about half a percentage point. The yen was higher, so it added a little bit of pressure on the dollar. And expectations that the Japanese central bank will indeed maybe raise rates or do something to shore up the yen. But the problem is, it appears that energy commodities, specifically crude, are bottoming. Today both the WTI and Brent scored gains. The WTI leading with gains of flat 2%. Brent with gains of a little over 1.5%. The gasoline RBOB rebounded higher and it gained a little over 2% for the day. On the other hand, heating oil was down by about 4%. Yet the party boy, natural gas, with massive gains of almost 10% in a single day. Natural gas will be the story of inflation this coming winter. I remain a bull on natural gas, and my pick is the ticker CTRA Coterra. I made a video about it before. It has the cleanest fundamentals, and the valuation is absurd. But you have other good names like Cheniere, the ticker LNG, the ticker EQT. We covered plenty of names before. All of them are good, but again, you gotta do the fundamental analysis and pick your pick. But natural gas, that is one corner of the stock market that I remain bullish on. Another one is uranium. Unfortunately, we don't have a lot of picks in the stock market besides the ETF URA and another name that I'm going to discuss with you in the options market. We have to pay for it, but everybody talks about peak inflation when it comes to commodities. Peak inflation is not happening in this commodity. Yellow cake, uranium, is actually surging higher. And the reason is, now that we have the tensions in Europe, the possibility of zero natural gas flows from Russia, a lot of these European countries will depend on uranium. Yellow cake is one component to power these nuclear facilities. So we're seeing the prices surging higher. The expectations are the demand for yellow cake and uranium will also rise. Back to the future, soft, where it's soft again. Led by lumber, losses of almost 4% for the day. Coffee down a little over 2.25%. Cocoa down a little over 1.5% for the day, but with modest declines in OJ and sugar futures. The only winner today was cotton futures, closing with modest gains for the day. Metals. Mixed picture here. We have a rebound of radium as the dollar goes down. Likewise, modest gains for silver futures, but the most dollar-sensitive commodities, gold and copper, was down. Copper was down a little over 1%. Copper was the trade to be long at had the CPI came out cooler than expectations, and the dollar went down big. Copper would have performed pretty good. The opposite happened once the CPI came out too hot. What about meats? Muted action for both live and feeder cattle futures, be it live cattle in the red, feeder cattle in the green. And the new big tech lean hogs, well, it is a down day for around 1% for this commodity. When it comes to grains, the winner is wheat futures with gains of about 1.5% today. The rest muted, rough rice, canola, soybean meal, all muted for the day. We have decliners, led by soybean oil down a little over 2% for the day, followed by corn, soybean, oats, all closing in the red. Moving on to the big casino, the options market. What's going on here? The volume all in all went down, but it went higher for one name, which came up number 1, Tesla, at around 2.2 million contracts traded today. Around 51% of those were calls. But we have some manipulation that took place today. More on that in a second. But at number 2, Apple, at around 1.6 million contracts traded today. Around 50% of those were calls. We're seeing more and more bearish bets against Apple. We'll talk about that in the charts analysis. But at number 3, Meta, at around 870,000 contracts traded today. Look at this. Only 38.5% of those were calls. calls. They're buying a lot of puts against Meta. Now here's the piece regarding Tesla. Why was Tesla an outperformer for the day? We saw massive call option buying for the 300, 305, 310 calls at the expiration date of this Friday. In other words, somebody's manipulating the stock higher by buying these contracts in and out to force a gamma squeeze, to deceive the dealer into buying the underlying stock Tesla to push it higher. They get in, they get out in the same day, or within 2 days or 3. They make a quick gain, big time kind of gains. Look at the options grid. They bought the 300. You see the open interest is not this large at all, meaning they're not holding the contracts. They have no conviction that Tesla will indeed move higher by the end of the week. And when we look for next week's options grid, crickets, nothing. Meaning this is a forced gamma squeeze. A large whale type of trader is playing this game. They stampede in buying the 300 calls out of the money, forcing the dealer to buy Tesla. And they close these contracts. And therefore, you see the volume way too large compared to the open interest. And then they roll these profits and they buy the 305 contract. And they make a quick gain out of that. They close these contracts, roll the profits on 310. As the stock continues to move higher because the dealer is buying, they continue to make money. But at some point, they know the stock might not make the 310. They close these contracts and they bail out. And comes Friday, the dealer looks around, the contract's already closed, nobody's holding open interest at all, they dump shares of Tesla. But in the process of this fake gamma squeeze, a lot of retail mom and pop investors have deceived and they jump on the rally in buying Tesla shares, only to be flushed down once this manufacturer gamma squeeze is done. This has been going on, folks, for years. I call it Tesla wave trading. It is a large type kind of wave. Somebody extremely powerful, a lot of money is behind this squeeze. Now let's move on to the unusual activities that took place in the options market today. We start with the ticker SPY, the S&P 500. Somebody's buying calls here. On the other hand, somebody's selling those calls to raise some cash. But from the buyer's perspective, they see more upside for the SPY, a rebound, but it is unrealistic right now. And therefore, my hunch is somebody sold these contracts to raise cash. Somebody holds the SPY, sold these covered contracts to raise cash. But anyhow, somebody has to buy them. So the buyer bought the 425 calls for the expiration date, October 28th, with expectations the SPY could rally higher and gain over 8% by then. They did around $2 a piece, and this trade, all in all, spending around $3 million. And at the bottom of the table, what about the ticker SBUX Starbucks? A lot of pumping has been done in the last 2 weeks in Starbucks. Schultz was out, they had their investors day, and they're panicking, of course, because the company spent a lot of cash in the last quarter, and they're running out of cash for such a large company. Somebody sees the sham, and they're betting against Starbucks. They bought 85 puts for the expiration date, September 30th, with expectations that the name could move down and lose more than 8% of its value by then. They paid around $0.50 a piece to enter this trade, all in all, spending around $300,000. Continuing with interesting trades, what about the spread for the SPY? This time around, it's a put spread. They bought the 372 puts, and they sold the 340. All for the expiration date, October 14th. With expectations that the SPY could go down and lose more than 6% of its value by then, but not more than 14%. They paid around $4 a piece for buying the 372 puts, and they received in credit around $1 a piece from selling the 340 puts. All in all, the entry cost is reduced to around $3 a piece, and the total comes to $1.2 million. What about the triple Qs, the NASDAQ? Somebody sees more downside here, and they bought the 255 puts, the expiration date, October 14th. With expectations, the Qs could lose more than 14% of its value by then. They hit around $1.46 a piece, down this trade, all in all, spending around $500,000. And lastly, here it is. We want to talk uranium, the ticker CCJ. An impressive outperformer for the year, and somebody sees more gains to come. They bought the 32 calls, the expiration date, October 7th. With expectations, the name to move higher and gain more than 5% from them. They paid around $1.20 a piece to enter this trade, all in all spending around $500,000. Moving on to the heat map analysis, what's going on here? You're seeing the reflex right before your eyes. Yesterday was a sea of red, now we're seeing some short covering in certain names, meaning profit taking. But as we see these names moving higher, we will also see more sellers and more shorting. But for now, the names that led the rebound, you got Apple, a big rebound, chips, certain names in software such as Snowflake, Uber, were outperformers for the day. In communication services, we have T-Mobile and Comcast, all bouncing higher. Netflix, we'll talk about the news behind Netflix in a second, but Tesla was an outperformer. We'll talk about the gamma squeeze in the options market. The travel names also rebounded higher. Starbucks gained a lot today, over 5%, in the heels of the Investors Day and the fake news that came out. But we have more negative news coming for Starbucks. We'll talk about that in a second. Another corner that outperformed today in industrials is the defense contractors. The tailwinds for these companies are still intact with the Ukraine war. Utilities is an outperformer today. And obviously, natural gas, oil, these names are outperforming today big time. And materials, agricultural stocks also outperformed. Of course, they're bouncing from massive losses earlier this week as the looming strike in railroads could damage their business tremendously. Now, the underperformers, the obvious is steel, copper, all of these metals underperformed, and the reason is the disappointing CPI is likely to push the the dollar higher. On top of that, the railroad strike also will impact a lot of these materials. Real estate was an underperformer. The reason is yields continue to move higher. Of course, the railroads, the ticker UNP, Union Pacific, and Industrial are very big, along with other railroad stocks. Some pockets in healthcare underperformed today, and in technology, the ticker ORCL Oracle was down big. That is a reveal of earnings yesterday. Now, can the reflex continue for a day or two? The answer is yes. We have a lot of activities about to happen in quad witching on Friday. If they go higher again on Thursday, tomorrow, in all likelihood Friday they'll go down. Because remember, right now the dealer is looking for the points of maximum pain. They want to make the contracts being held by call options holders and put options holders expire worthless. So they're going to move the market one way or the other. They're going to attempt at least to move the market one way or the other to the point of maximum pain, with the majority of call options and the majority of put options expire worthless. We'll talk about that in tomorrow's video. But let's do some corporate news here. We start with Starbucks. Starbucks announced a new set of benefits for their employees. The problem is they have a catch. And the catch is all of these stores, including ours, they will be excluded from the new financial package. So this is yet another attempt for Starbucks to discourage unions, as a matter of fact, punish them. We also have some more bad news for Starbucks, but not really, because the manufacturer of these Starbucks energy drinks is actually PepsiCo. And PepsiCo has recalled the prepackaged Starbucks brand espresso drinks due to possible contamination from metal fragments. So if you have the habit of buying these drinks, you might want to hold on a little bit, unless you have some aluminum deficiency. Anyways, what about Twitter? Everybody's talking about the whistleblower. Is this good? Is this bad? First of all, it exposes things that we already knew about Twitter. We know that Twitter is full of scams and full of operatives on behalf of foreign governments, in this case China, India. The whistleblower exposed all of that. But what the whistleblower did not expose is how the deep state in this country also infiltrated Twitter. The intelligence apparatus up Uranus, they're all over Twitter, and their goal, of course, is to suppress speech. But that part they're not going to tell you. Now, does this strengthen the case for Elon Musk versus Twitter? The answer is yes, but it's not going to change the outcome. It only makes the outcome, the possibility of the outcome of forcing Elon Musk to buy Twitter out of the question. So in all likelihood, the judge is not going to force Elon to buy Twitter. But the part of punishing Elon by a massive fine, multi-billion dollars worth of fine, that's going to happen regardless of the whistleblower. And then we have Patreon. It's not listed in the stock market, but Patreon is letting go about 17% of its staff in Europe. So we're seeing more layoffs in these technology companies. Here's the news regarding Netflix. We have some optimism because Netflix got out some fake news that their ad-supported tier will reach 40 million euros. Here's the problem. What is the cannibalization effect? Because if you're going to open a free tier with ads, a lot of folks will downgrade. They're not going to become paying members. Is the exchange worth it? Is Netflix about to make more money from selling ads versus selling memberships? That is one thing to think about. Another thing is, specifically overseas, what if some Bulgarian hackers figure out a way to disable ads on Netflix, and then everybody gets it for free? Oh yeah, you think this is good news for the company? Then we got news for Amazon. This is devastating. The state of California is suing Amazon, aka the Evil Empire, for alleged antitrust violations of native prices. It represents Amazon's biggest legal challenge in the U.S. today. The reason is Amazon owns the politicians, the judges, and even the president. So nothing happens to them, even though it is a clear monopoly. It is destroying the fabric of this country, small businesses. But that doesn't matter because they own everybody in the government. But perhaps they forgot to pay some California politicians. And now the politicians are saying, hey, Amazon, where's my taste? You want us to get rid of this case? Show us the money. And lastly, more corruption news for you. Tesla is now pausing its plans to make batteries in Germany. Why? Because they're going to make them here in the United States to qualify for tax credits. More freeloading, more handouts to the biggest corporations in America. This is a multi-billion dollars company. It is worth over $700 billion. Yet somehow we have to give them more handouts. And of course, Elon Musk will take the handouts. He has no problem. He's been doing this since the company began. Without the generosity of the taxpayer, or should I say the robbery of the taxpayer, Tesla would have never been possible. So all of you morons and sheepies who are cheering for the so-called Inflation Reduction Act, the Inflation Reduction Act doesn't reduce shit. It only reduces your quality of life. And it is designed to rob the taxpayer and transfer all of that money to the biggest corporations in America to save the planet. You see how this scam works? Anyhow, moving on to the ETFs heat map. What's going on here? Muted. Maybe the stocks ETFs is not showing the reflex reaction that this one does. It's only a reflex reaction. That's all there is. Yes, growth outperformed value, but it only did that because yesterday growth underperformed value by a lot. But everything was pretty much muted for the day. You got energy commodities, you got energy ETFs, XOP, XLE outperforming by a lot. And then you have the underperformer, the XME, down big in metals, materials, real estate ETFs down big, but that's about it. The outperformers, mostly in commodities, not just best in the OIH, for example, for oil and gas, but if we zoom in, even URA for uranium outperformed today. When it comes to international, the outperformers came from the EWJ in Japan, the yen was higher today, and India continues to outperform the ticker INDA. And besides that, it is just a mere reflex. They might build on these gains tomorrow, but sooner or later they're going down. Maybe commodities, specifically energy, will sustain the gains, but besides that, it's really hard to see. Let's move on to charts, and we start with the SPY, the S&P 500 30-minute chart. What's going on here? We got gains right away, right off the door in the morning, and the gains continue to build on until the afternoon when the flush down started. Why? What is the psychological explanation behind that? The answer is a lot of folks who made a lot of money from shorting yesterday, they booked their profits right away in the morning, at least some of the profits. And then as these stocks and the indices moved higher, more sellers came and more shorting took place. But the indices at least did not lose critical support levels. Lunge protection team, whoever was behind holding those support lines, they did a pretty good job today. Of course, for the SPY, the support 391 remains intact, and now they got support 393.16. The momentum indicators remain oversold, at least for now, so we could see more gains to come. That could take us all the way to 398, it could take us all the way to 400, but by then, the oversold conditions will be resolved, and the main theme of bearishness will be resumed. Now, this could happen right off the gate tomorrow, but I'm just telling you, there is a possibility of more gains to come. And the reason is the oversold conditions. Here's the daily chart for the continuous contract, the S&P 500. While the 30-minute chart shows the possibility of more gains to come based on oversold conditions, the daily chart says not really. So whatever pops you're going to see, they're going to be short-lived because the daily chart remains negative. Yes, the chart is holding the trend line. This is good news for the bulls. The last good news left. Yes, they're holding at 3,960. They could lose that right away tomorrow. They need to build on more gains to get the chart at least above half of the body of the flush down candle. We have any hope of reversing this bearish trend. Because we look at the MACD, the RSI is still curling their way to the downside, indicating more pain to come. The Qs, 30-minute chart, what's going on here? Similar story with SPY, gains right off the gate in the morning, but by the afternoon they flushed them down right away. Yet the plunge came out by the end of the day and reaffirmed the support at 294.33. We now have what it appears to be a double bottom, indicating we could see more gains to come. We could see gains all the way to the trend line in yellow. We could see gains all the way to 300.72, but by then, the oversold conditions will be resolved. The bearishness, the assumption at least for now, the bearishness will resume. So a lot of you who are holding put options with the expiration date of Friday, you're going to be a little nervous here, specifically if the chart continues to move higher tomorrow. And therefore, you should have booked some gains or at least rolled all the way till October, expiration date. Leaving yourself with 2 days till expiration, bad strategy, because there are mechanical reasons behind the reflex. Moving on to the daily chart for the continuous contract for NASDAQ, once again, unlike the 30-minute chart, which shows some hope for the bulls, the daily doesn't. It is not for now. Yes, the support 12,207 is intact for now, but it could be lost right away off the gate tomorrow. And then the next support will be 11,689, and after that, the June bottom. For now, the momentum indicators remain negative. The RSI, the MACD, the volume still above average, favoring more selling to come. So whatever bounces we get in the short-term charts, such as the 30-minute chart, will be short-lived until we see more repair done in the daily chart. And by repair, I mean closing the week above half of the body of the pain candle. And even if they do that, they have a long way to go to be out of the woods. Here's the IWM 30-minute chart. What's going on here? Nothing happened. Within range, the support remains 178.60 and the resistance at around 183.25. Look at the MACD, look at the RSI. There is a possibility, after making higher lows today, that the IWM could move higher and regain 183.25. But for now, the gains will not be sustainable until they do more repair work. And by that, I mean moving all the way to recapture 188 as support once again, perhaps closing the gap. But even if that happens, the bulls are not out of the woods. And the reason is we have the FOMC next week, and Jerome Powell could slaughter them again. Here's the Dixie daily chart. Look at the RSI, the MACD in negative divergence. But how is the chart so far solving the negative impressions in both the RSI and the MACD? We talk about 3 ways the bullish momentum could turn into bearish momentum. The worst way is a flush down, where we see the crossing in the MACD. Another way is a pullback. And the third, the most bullish one, is consolidation. For now, which one is taking place in the dollar chart? The answer is consolidation. So the dollar bulls have the advantage, at least for now, until we see an acceleration in the negative momentum in the MACD and the RSI, and we see big flush down candles. This has yet to happen in the dollar, and therefore the bulls have the advantage. And this is adding more downward pressure on gold.
Now, according to Forbes, at the time of this recording, there are only 19 billionaires in the entire world who have made their fortune solely from Bitcoin. Yes, that's right, Bitcoin. And in this week's episode, I'm giving you an exclusive tour inside of Bitcoin Billionaire's New York City penthouse loft.
Now, I can't tell you exactly who lives here, just know that they're not exactly on the best terms with Mark Zuckerberg.
The penthouse loft is located at 20 Green Street here in Lower Manhattan on one of the most desirable bougie blocks in all of Soho. The apartment has 4,300 square feet of interior living space, a rare 2,200 square feet of outdoor terraces with 3 bedrooms, 3.5 bathrooms, and it's currently on the market for just under $17 million. As always, I'd like to thank the listing agent Steve Cohen at Douglas Elliman for letting us tour this one-of-a-kind listing. More information about the listing can be found down below in the video description, and with that, let's jump into the tour.
So welcome on into the apartment. Right off the front door, this is your entry area. I actually thought this was a mirror the first time I walked in, but this is just a little cut-through area, because I guess when you're a billionaire, you need a little greeting area. Right off here, we have the entry area, which has wine storage, floor-to-ceiling shelving here. This awesome fig. I believe this is, do you think this is real? I think this is real. And then the space opens up to your great room. This is prime Soho loft living, and we'll break it down piece by piece. So here you have 2, 4, 5 windows facing west, so you have all that natural light coming in. If you look across the street, you can see all those cast iron facades of the buildings here in Soho. And this main feature here in this, what would be the dining room, is this awesome solid piece of wood, making up the dining room table, and then broken off, so this is all one piece then. This is the base of a tree that makes a breakfast nook, and you can even look and see all the rings here. I'm not gonna do it right now, but you can count how old this tree is. I love the rustic feeling in this apartment. Above this table, you have this beautiful hanging light fixture, really complements that rustic feeling. Behind us, actually, this is pretty sweet too. Look at this light fixture above here, jutting out this kind of antique light fixture coming over the breakfast table. There's a lot of, because I mentioned kind of indirectly who owns this apartment, there's very specific and eclectic pieces throughout the whole space that I'll point out as we go on the tour. But right behind me here, we have your bar, open concept shelving here. This is where it gets really impressive. This is a 57-foot wall continuous with this built-in gas fireplace. This is the heart of the home. As you can see, there is so much room here in this apartment. This runs through the living space, which then transitions to this really unique music studio in this open concept loft. You have this executive desk, and behind me, this is a Steinway & Sons grand piano, and it's interesting. So to get these things in here, you have 2 options. Number 1, through the windows. So you can actually hire a crane to bring this up through a window into your loft. And in this case, this was actually carried up by hand and placed here in the loft. And it sets the tone. The piano is the focal point here, the whole music studio. So you have the Steinway & Sons, you have the actual electric keyboard here, and then in the corner, this awesome hanging leather, almost like Men in Black, like you remember that scene? Hanging down from the staircase with the built-in LEDs here and all the albums displayed nicely under the staircase, just definitely sets the mood. Also below our feet, you have all these animal skins. Just very rustic, modern feeling here. I love it. And this is so cool. This is a almost stainless steel. I want to say it's gunmetal, but a very just industrial table here in the center for your coffee table books. I want to point this out just to show the scale of this place. So I'm going to extend out my wingspan. I think it's like 6'7". It's longer than I am tall. This is a large couch. This is a large room for entertaining. It's just a lot of open space, and I like how they broke it up so nicely. I think that could be a trick in lofts, is really how to distinguish which space is what. So then right off of your kind of entertainment area, you have the open concept chef's kitchen, huge island front and center, polished stone with that waterfall edge. Below us on the floors, we were debating. We don't know the exact type of wood, but just based off the grain, we think it's either ash or white oak, so comment down below which one you think it is. But this kitchen is definitely something special. You can see the cabinetry behind me, all open here with that glass, and that's kind of cool. So if you are here and there's an event or a party, you don't have to go rummaging through someone's cabinetry, because it's all open and displayed with these glass cabinets, again, running all the way up to the ceiling with these 12-foot high ceilings here in this loft. As far as the appliance suite, it's all Miele, so you have the commercial grade hood over top, and this is a beautiful, I mean, this is a workstation. This is the InSinkerator sink. So this has the built-in food waste disposal all here, stainless steel. I even like how you have the stainless steel tiling here on the backsplash. Everything's just very, very nicely done. And here you actually have the door, which pockets in from the entryway, so you can shut this off if you wanted. And this is just frosted glass here with the steel frame right back in there. Here you have your oven, all that. And I want to show you this because I feel like something that used to be a thing was cribs. You know, they open their fridge and see what everyone has in here. So here you have this built-in fridge unit with these ornate handles here with the brass. Let's see what they have. We are stocked. Wow. Okay, so you have some liquid death, cold brew, a lot of coffee, and beer, and some Coke. So there you have it. On the other side of your island, you have the breakfast bar, 4 stools, and I love the practicality, how you have a workspace here in the kitchen. Because I don't know about you, but when I am working from home, I love to work in my kitchen. And here, you pull up the stool, workstation, TV built into the wall, right on. I mean, the styling in here, I have to say, it's always interesting when you tour a home of someone who is notable, because it's like, oh, what's their house like? Just look at this. This is, we're trying to figure out what this is. If you know, comment down below. There's Russian on here. It looks like a telephone at first glance, but then there's these ports on the side, so it looks like it might be a motor. Then built in seamlessly, you have a powder room with, you can't smell it, but the smell in here is one of the nicest scents I've ever come across in my whole life. And yeah, I need to figure out what that is. But you have marble on the walls here, trough sink, floating vanity with this cool imprint here of a scene from times long ago. I just love the theme here. The aesthetic is so nice. But leaving the powder room, we'll keep this shut for now. We have this awesome bookshelf here with that, again, rustic finish with the brass, all the books, and another clue here of who lives here. I mean, if you haven't guessed by now, like, come on. Behind me here, this is an oversized barn door, which is quite hefty, which seals off a whole section of this loft. So come on and check this out. Welcome to the den/study area here in this penthouse. And this just has such an executive feeling here. You have another gas fireplace, TV recessed into the wall here, and these are, I believe, 1995 Mac computer chips here on display in this just very unique art piece here. Now right off the fireplace built into the entertainment center in this millwork, there's actually a hidden door behind this panel pushed open. Comment what you think is behind this door. We were told that we could not film in there, so let your imaginations run wild in the comment section. We'll keep this shut for now, but I'm just so curious. I want to show you this though. So there's lacquer on this far wall here with a door which is flush into the lacquer, which leads into a bedroom which is essentially part of this den, and it can be hidden off from the rest of the home by that big oversized barn door. But here's the first guest bedroom, bed front and center. You have this beautiful hardwood here, millwork running floor to ceiling. You have an office off to the corner here, flat screen front and center. Here's actually another clue if you haven't got it by now. This is an erg, it's a rowing machine. I actually used to row at Northeastern, and we would race the university that the owners of this apartment went to. It's a much better school than Northeastern, I'll tell you that much. That's the final hint, but you have the rowing machine in here kind of as display, and then you have an ensuite bathroom with some beautiful smooth tiling here on the walls. The glass wraps around the entire bathroom all the way into the corner here in the shower. Very minimal, modern, and clean. Leaving the den bedroom area through this oversized barn door, we're now head upstairs, and this staircase, it's beautiful, it's glass, it's steel, it's floating, and then you have this LED light going up the stairs. I want to point out this, the walls are suede. I'm not going to touch this with the front of my hand, I don't want to get these dirty, but these are suede walls. The details in here are everywhere. But now let's make our way up to the second floor here. Now at the top of the staircase, this is where the remaining bedrooms are, and in front of me, this is the owner's wing of this apartment. And one of the things that really separates this loft from any other loft in Soho is the fact that here in the owner's bedroom, the wall opens up, it's floor-to-ceiling glass, and you have your very own private outdoor space facing west where you have views of the tops of all those famous cast iron buildings here in Soho. If you look uptown, you can see Hudson Yards, all the water towers in the neighborhood, even looking south, One World Trade Center. To have this in New York City is such a rare piece of real estate because it really brings that indoor-outdoor living to New York City. So heading back inside, again, this is the owner's bedroom with this huge shag carpet taking up most of the floor space here. Bed front and center. I love this open concept shelving here. Just taking a look even at the books that the owners are reading in this apartment. You can find out a lot about someone by what they read, and especially someone who has reached a level of success. It's always interesting to see, okay, that's what they're reading. That's on their bookshelf. I always find that interesting. But off of the bed, you have this little sitting area here. I believe that is a TV, which is mirrored right now, facing the bed, which could be fun. And then you have two closets on either side here. We just pop into one. So the first one, super minimal, automatic LED lights which turn on when you walk in. And there's something fun in the other closet I want to point out. We have
Minions have spawned. First blood. An ally has been slain. An ally has been slain. An enemy has been slain. Double kill. Slain an enemy. Enemy killing spree. Shut down. An ally has been slain. An enemy has been slain. Your turret has been destroyed. Shut down. Shut down. has slain an enemy. An enemy has been slain. You have slain an enemy. inhibitor is respawning soon.
The Bitcoin billionaires high tops. Yeah, that's how you know you made it. Leaving the closet, you have the pocket door in the closet just for that privacy. The wallpaper in here, again, this is something where I'm not sure exactly what this is, but I know it's probably very expensive. So again, we'll throw in a close-up. Comment below if you know what this is on the walls. Off of the bedroom space, you have your ensuite bathroom here, oversized pocket door, which leads into a very minimalistic bathroom here. Under our feet, we have tile, and then we have marble on all the walls here. Two vanities, you have the water closet behind here with that frosted glass just to keep it nice and discreet. And then behind me, walk-in, oversized shower with the rainfall shower head, the handheld, another handheld, and then this cool LED light here built right into the marble. Very minimal. And then again, you have this whole wall here, which is glass, so you can get sunlight. Actually, that's north, so you would get some bounce, but still have light in the shower. Is pretty sweet. Out of the bathroom, back into the hallway, you have your staircase off my left here. In front of me, the hallway leads back. You have your laundry room off to the side here. You can throw in a B-roll shot to show you that. And off to my right, this is the third bedroom here in the apartment. Very decent size. You've got your Peloton, your weights there, king-size bed, ensuite bathroom at the very end here. The details in this bathroom are pretty phenomenal. You have this trough wet style sink here with travertine on the vanity and then even up the walls. And you have these little moments in the corners where you have LED lights inlaid here in to the travertine. Of course, the throne, shower right off the vanity. And then if you make our way back out, this here you have this nice dark hardwood, which could be mixed use for a closet, but also storing your TV, entertainment. Then back out into the main hallway. This is pretty rare in New York, so you have the western-facing terrace. Additionally, you have your eastern-facing terrace, which has not been finished yet, so this is totally open to be customized, but to have not one but two terraces in Soho, that's very unique. And there's still more to see, so let's head back inside. And there's still one more floor here in this penthouse. I love just the grand nature of this penthouse. It's just very, man, if I had the $17 million, I would make an offer. But at the top, so we have a skylight letting in all that natural sunlight, even on a cloudy day. And at the very top, right off the staircase, we have your wet bar here. In front of me, you have your third terrace facing east. Behind me, this is the creme de la creme. This is the largest of your four terraces here. Again, it's unfinished, left totally open to be customized however you want it. Here's where you really feel like you are the king of Soho here. You're above most of the cast iron buildings here in the neighborhood. You have unobstructed views of Hudson Yard. You see the Empire State Building just peeking out there. You have One World Trade Center slivered right in between us. And of course, on a sunny day, you have the Hudson River behind us with all those sunsets. This is something special. Here, come look at this. So I actually used to live, you can kind of see 33.5 Green Street there, and I always used to look at this building and I'm like, man, I wonder what the penthouse looks like. So it's very cool for me to share this with you guys watching. Steve, I want to thank you for letting us tour this listing. It's one of a kind. If you are out there and you're looking to purchase this listing or you know someone who is in the market, all the information to buy is down below. Come see it. And with that, we'll see you in the next video.
Welcome to Summoner's Rift. "30 seconds until minions spawn. Minions have spawned. First. An enemy has been slain. An ally has been slain. Shut down. Your turn.